The unthinkable is about to happen with stocks, and it has to do with the Iran war, the markets, interest rates, and the price of oil. So we're going to discuss all those things today and make sure to help you make money in the market. Currently, I'm buying very heavily, and we're going to discuss what I'm buying and the reasons why. So with that being said, we're going to jump in by starting to watch this short video on Fox News to show you what is happening. This is breaking news.
Joining us now, Brent Sadler, retired U.S. Navy captain and senior research fellow with the Heritage Foundation. Good to have you in with us this morning.
Yeah, good morning, Shannon.
Okay, so let's start here. We want to talk about Karg Island because for a lot of folks, a couple of weeks ago, they'd never heard of this. They didn't know what it was. But the president said, we hit them hard on Karg Island. It's where all of this, most of their exports of oil transit through here. We've hit their military installations, we're told, not yet hit their oil infrastructure, leaving that in place.
Yes, I mean, Karg Island is 90% of the throughput point for all of the Iranian petroleum products that they produce. And China has a lot to lose if that's cut off. The military facilities there, I think, were mostly in place to try to defend against these type of attacks. So I think what really is being sent is a message to Tehran that the United States can reach out and touch those facilities if it so chooses, and that there's more to lose, not only in Tehran, but more importantly in Beijing, if Iran continues on the path it's on.
Yeah, so let's talk about that because we'll go to our next map here that tells us just how important the strait is. We know this, but how much transits through there. You talked about Asia. Obviously, I think it's about 80% of Iran's oil is to Asia. And so they've got an interest in what's going on here on so many different levels.
Well, actually, 80% of everything that exits the Strait of Hormuz, the energy, that's LNG as well as petroleum, heads to Asia. Now, a few of our key treaty allies like Japan and South Korea benefit mightily from that trade that comes out of there. But China is the biggest customer. So China has the biggest worries, and they have long supply or lines at the pump. And as a kid, I remember this in the 70s oil crisis. So it's their turn right now. But yes, Asia is the biggest benefactor of that trade.
Yeah, I do remember that too. We're dating ourselves, but sitting in the car, I remember my parents waiting in line, and it was based on the number on your license plate, which day you can get in line to get gas. And so, that's something that others are going to experience now. Now, I want to get to this issue about their enriched uranium and us trying to get our hands on it. There's been a lot of focus on this place called Pickaxe Island. It's part of, Pickaxe Mountain. It's part of the nuclear facilities there. We don't know if that's where the uranium is. There's a lot of suggestion that it is, but this is a tough place to get to. We understand they've been fortifying this bunker as well.
Yeah, so it's about a mile south of Natanz, which is a well-known site for enrichment of uranium. The IAEA, during the previous inspection routine or regimen that they had under the JCPOA, was never allowed access to this site. The Iranians treat this with a lot of sensitivity. It is deeper than the other sites that were attacked last summer in Midnight Hammer. So operationally, if the United States military was given the order to go out and reach and touch this place, it's a different nut to crack. Not impossible. Boots on the ground are one of the options to actually get in there, but it may not be necessary if at least you isolate it by closing off the access points.
Okay, and to that point.
Wow, so just like you saw, there is big and massive things happening every single day, and we're going to discuss how this is actually affecting the market. So with that being said, let's switch over to here. So how do we actually make money in the market like this? What we're seeing is a few main things. First of all, oil is spiking at crazy levels, and we've actually seen this before and throughout history. So we're going to discuss that. So oil movement currently, before the conflict, was at $65. It peaked around $115 currently at the time of recording this, and then it's gone back down to about a level of 100. So there's a 45% increase in just 2 weeks. Now, there's big takeaways from this, and we've seen this before in the Iraq war, Ukraine versus Russia war, obviously. This might actually cause there to be a lifting of sanctions in Russia, which is a totally different topic. So I'm not exactly too worried about this, and I'll share with you how you can make some money. Phase one, the immediate reaction of the war was this. So there was markets reacted instantly. There was oil spikes, defense stocks rose, and then investors did panic. A few did sell out. There was some shorting of some positions, obviously, that got hammered. Now we're entering into phase two. So this is the real opportunity for you to make money, and I'm super excited about it. So smart investors focus on the long-term positioning of the companies they're investing with how the fundamentals actually look instead of just buying hype, and then buying quality assets during those fear and opportunities. The common investors make these mistakes. They listen to headlines, they react to breaking news, trade emotionally, and then they try to predict daily events instead of just thinking over a month, quarters, and years. The result of this is that most investors end up losing money, unfortunately. And this happens all the time. People come to me and they say, Johnny, I'm really struggling with consistency. How do I stay consistent in the market? And most times what you need to do is remove yourself emotionally. It's very hard to do because when you're talking about your retirement accounts, your savings that you've worked up 20, 30 years to do, you get scared when you see, oh my gosh, I woke up and my account's down 80 grand. So that's what we help you with in our mentorship and in this channel. The stock market transfers wealth from impatient investors to patient investors, impatient investors to patient investors. When someone else takes a loss, you can take a win on that by buying cheaper, good stocks. Most people during this time try to liquidate some cash. Here's the danger of actually staying in cash. Cash isn't safe long term. An example of this is inflation destroys purchasing power. And we've seen this. If you didn't invest since 2020 and you just stayed on the sidelines, you would have missed out on potentially hundreds of thousands or millions of dollars just by investing 50 to 100 grand. Seriously. Like if you would have put some money in Nvidia and Palantir, you'd be worth millions and millions just by putting 50, 60, 70 grand. So holding that cash, there's a 45% loss of purchasing power over 10 years. So ultimately, doing nothing can be more risky than investing, which is why I encourage everyone to invest on this channel. Obviously, this isn't financial advice, but I am currently investing, and these are the main factors that I'm looking at. So how we look at this example is we look through history and historical trends. And the current examples of what's happening now are Gulf War, Iraq War, Arab Spring, and then the Ukraine War. So over the past 2 decades, these are the main conflicts. Now, obviously, what's happening now is with Iran, but it's still in the Middle East. Geopolitical conflicts often occur frequently and more frequently than we would like to admit. Investors must study that history instead of reacting emotionally. Now, I do all the research for you, but I still encourage you to do the research as well. Market sentiment indicators. So let's look at the fear and greed index here for today. As you can see, there's still extreme fear in the market. It's at 20. And then the VIX here at 27.19, so still very, very high. It peaked around 29.50 and then it's come back down a little bit, but now it's right back up. This is more of a normal territory. So if you see down here around $20, $21, so still very, very high. And what we've seen through trends is when fear is high, it's a good time to buy. When fear is low and people are very bullish on the market, that's why you have to be careful. So there's 2 major economic concerns as of today, the time of recording this, which is March 15th. Rising oil prices and then weak job numbers, especially in the labor market. We've seen 92,000 jobs lost in February. And I personally think it might be a little bit higher because usually they try to soften those numbers. They don't want to be the bearer of bad news for everything. So with these 2 things happening at once, it would squeeze the wallets of a lot of Americans. Now, I'm recording some good videos on the debt crisis right now, and so those will be launching soon. Subscribe if you like that content. But how will these things actually affect the market is stagflation. Now, stagflation is a very scary word. Most people are just figuring out kind of what it is. Essentially, it's this. It's very simple. It's high inflation and then high unemployment. That's all it is. When there's high inflation in oil prices, there's high inflation in the tariffs being canceled from the trade war, and there's obviously weak jobs. This causes real big concern with stagflation. So why the Fed is kind of trapped in this issue is normally when weak job numbers come out, the Fed cuts interest rates to soften the blow, increase spending back up, gives a buffer to artificially boost the economy. But now with high oil prices, there's an actual inflation risk of happening. So higher inflation, lower jobs equals. The Federal Reserve cannot easily cut rates in this environment, and this creates a short-term market volatility spike, which is what we're seeing with the high fear and greed index. Lots and lots of fear. So this is why oil prices matter, and the energy impacts the entire economy. So for this example, let's look at a bottle of Coca-Cola. By the time it goes through the factory, all the ingredients come, they make it. It has to get shipped out and then placed in each store and each package sold to the consumer. Then the consumer has to buy it, bring it home. Energy is a part of every single piece of that infrastructure line. So fuel costs, making of the truck parts, the actual jobs, how those people are affected with buying more Coca-Cola. And so oil affects every single aspect of our economy. And that's why I kind of laugh when people say, oh, well, oil's bad for the world. And I'm like, well, oil is actually good for the world. Unless we find another energy source to replace it with, it's essential. It's literally essential. Our entire homes are created with oil. And so transportation, manufacturing, logistics, and consumer prices are all things that oil affects. if energy costs rise, inflation increases across the economy. Does not matter what happens. And the reason why is the Strait of Hormuz. So let me just pull up a picture here of the Strait of Hormuz. So this is obviously Iran. This is the Strait of Hormuz. So just this little piece right here. This is the UAE, Dubai, which a lot of people know, with Burj Khalifa, Qatar, Bahrain, Kuwait. These are all people that have gotten, or countries, that have gotten bombed by Iran in this conflict. Now, the problem with this is 20% of all the oil passes through this little strait right here. And Iran has since closed the strait and only allowed certain countries like India. And this little island here is where most of the oil comes from. So it travels by ship out here and then out to the rest of the world, out to China, different markets, that sort of thing. Okay, so now you guys know what the Strait of Hormuz is. This is where the problem happens. When the strait is closed, disruptions here create massive market uncertainty. I mean, 20% of the market of oil in the entire world being closed is hundreds of millions of barrels of oil per day. So this is how markets price in risk. Markets tend to overreact to uncertainty. Then they price in the worst case scenarios, and then they correct later once reality settles. Investors care a lot about their money. That's the fundamental. And when people sense risk, they're going to think the worst is about to happen, which is when people typically sell on emotions, or they price in the worst 3, 4, 5 months down the line. This creates definitely some temporary price distortion, and that's what we're seeing. So if we look at historical market data performance during the wars, there's been 70 wars that have occurred over 30 years. The S&P has increased 1,200% over the past 30 years. So if you ever get stuck in a mindset of thinking, my money's going to disappear, like the world's ending, just remember this stat, that 1,200% increase over the past 30 years. And there's been plenty of wars. The NASDAQ increased even more, 2,000% over 30 years during all these wars. So the conclusion of this is wars do not stop long-term market growth. Here is another historical data point. So oil prices behaviors during these times of wars. We're not going to look through all 30, but if we look at the Gulf War, price per barrel was at 17, then it went to 40, and then back down to 20. The Iraq War, the spike declined within a few months, and the Ukraine War, very similar to what we're seeing now, went from 74 to 130 back down to 80. Most people honestly forget about these times. And I'm not telling you to forget about what's happening, but I'm telling you to press pause on your portfolio. We're going to go through a company here that I'm currently buying a lot of because oil spikes are temporary, then they always stabilize. This is the reality of the oil market. Despite fear, the global oil market currently has supply surplus. And even if the US is the highest exporter of oil, which would mean it's actually good for the US to have higher prices in oil, not forever, but they're benefiting. And so Iran relies heavily on oil exports as well, which is another factor. 80% of Iran's economy comes from their oil. So by closing that strait, they're hurting their own economy as well, which is why this won't last forever. Closing shipping routes would severely damage its own economy. So strategic importance of the region. The Strait of Hormuz is for not only oil, but also global energy supply to remain stable. Oil and inflation are only one of the factors. So other inflation drivers include wages, supply chain, consumer demand, and monetary policy. So oil spikes alone rarely cause economic collapse in any one country. It's mostly a combination of those factors. So we always have to look at historical market patterns and data. I love the data. So typical market patterns include initial panic, which is what we've seen. It's been 12 days into the war so far. Market dip, recovery within 12 months, and then the cycle repeats itself. Okay? So typically recovers in 12 months. What I do and what a lot of investors do, the smart money, is they just keep dollar cost average. This is the main simplest thing. If you don't know how to trade options, if you don't know which companies, just dollar cost average. I'm not saying by any means that just pick any company and just keep dollar cost averaging. There's some strategy behind it and looking at fundamentals, but don't stop. Examples of this is the 2003 Iraq War. So when the S&P fell, it recovered within 1 year. During the 2022 Ukraine started the war, there was a market drop and then it recovered also within 12 months. So the lesson here is market dips during crises often create buying opportunities on good, solid companies. Remember, the market doesn't just go up continuously. There's always drops. There's always cycles that repeat itself during history. And then if we look at one more time, the market growth over the last 15 years in the S&P is 700%. If you'd invested just a few bucks into NVIDIA and Palantir, oh my gosh, you'd be worth millions and millions of dollars, well above 700%. COVID was another example. Wars, recessions, bear markets. Markets continue rising long terms because we need good companies in our economy for jobs, and we also need good companies for other things, including investing. People have plenty of cash they want to invest. Plenty. There's billions and billions of dollars around the world. So don't be scared. Don't let this shake you out of your positions. If that's one thing you take from this video, it's that. Now, we're going to look into Palantir position. I'm just going to pull up here the exact stats of Palantir, and we're going to look through it. So year to date, a little rocky, expected. But if you look at since April 4th of 2025, so when there was the liberation tariffs, the company has literally doubled. Okay. So the stock price valuation used to be 74. Now it's at 150 as of today. All-time highs around the 190 to 200 mark. So what does this tell you? During wars, we need Palantir. When there's not wars, we still need Palantir. So this is the company that I'm currently focused on buying tons of shares this week. As you can see, some really good volatility in the company, but a good buying price. It's $50 cheaper per share than it was during the highs. Let's see. The highs were back in November 2025. So a great buying opportunity. And this is a big one that I'm focusing on right now. So if you guys like this video, make sure to subscribe. I'm releasing lots of videos, but I really want to get to that first 1,000 subscribers as quickly as possible so I can help more people just like you. That being said, we'll see you guys next time. Peace.